All right, once again, welcome and good morning to Calculating Overhead Rates. My name is Brian Hendricks, IDOT Deputy Director of Office of Business and Workforce Diversity. With us today are two very important people in our work here. Olga De La Rosa is one of our supportive services consultants with Ringgold Financial Management Services, and the other is Megan Moldenauer here at IDOT, one of my um, closest friends here in the building. Known her for quite a long time. She does a great job, and um, certainly with these overhead rate presentations, which I know she's always enthused to do, and is always um, she's never turned us down to do something like this. I'll put it that way. So we're delighted to have you both with us, and we appreciate everything you do. I don't know who's kicking this off. Olga, I'm guessing it's you. So take it away.
Yes, good morning. Thank you everyone for joining us today. Um, so today's workshop is calculating overhead rates. And then if you haven't done so, please make sure you put your name, company name, and your city in the chat. A couple of announcements. Please make sure you mute yourself, keep your video off, enter all questions in the chat or QA. We will answer questions throughout the presentation, and this session is being recorded and will be provided with a follow-up email along with any additional helpful resources. And there may be a short survey following the presentation. So please let us know how we can improve and any ideas for future workshops. So today's presentation is being done by Michelle Ringgold. She is CPA and MBA Ringgold. She is the managing partner, CEO of Ringgold Certified Public Accountants and Consulting. And then we have Megan Moldenauer from IDOT that will be presenting today. So our agenda for today, we've gone over the welcome and agency introduction, the announcements and the introduction. We're going to go over IDOT's goals, talk a little bit about Ringgold, and then go ahead and get started with our presentation about overhead rate. We'll go over overhead rate overview, schedule compilation, labor executive compensation analysis, direct costs, indirect costs, cost accounting standards, account labor systems, use of a CPA, and then we'll end with some Q&A on the portion of the presentation for Michelle and Megan, and then supportive services and resources, ways to stay connected, final Q&A, and some closing remarks. So IDOT's goal is to provide assistance to DBE firms and individuals interested in doing business with the department in ways that ensure equity, access, and transparency. IDOT, in accordance with federal guidelines, strives to facilitate and implement programs that can help current and future business partners open the door to doing business with IDOT. The department works towards this goal in a variety of ways, most notably through the tools available at our resource centers. The supportive services program that is executed through our partnerships with consultants who provide management and technical supportive services, assistance, and corresponding supportive services programs that fall under the umbrella supportive services program. This support is provided at no charge to IDOT's DBE firms, to firms seeking IDOT DBE certification, to Illinois UCP DBE certified firms who have an IDOT contract, and to prime contractors doing business with IDOT. So you can learn and grow with supportive services. While opportunities may increase for certified DBEs, it is not guaranteed. Free programs and resources support firms' goals at all phases of growth. They can develop technical and management skills, navigate operational expenses, connect with established firms, discover best practices for successful work with IDOT. You can visit idot.illinois.gov to find your nearest resource center. So this presentation is for informational purposes only. It is not intended to provide any accounting, legal, tax, financial, or professional advice. It does not consider your individual and company circumstances or needs. Before acting on any of the information in this presentation, please consult a tax professional, attorney, or professional to analyze and address your specific needs. Just a little bit about Ringgold. Ringgold is led by our managing partner and president, Michelle Ringgold. We are an Illinois licensed CPA and management advisory firm established in 2005 We are a certified DBE firm. We combine three major disciplines: auditing and accounting, regulatory compliance, risk management, and management advisory to offer turnkey solutions that maximize cost savings and efficiencies. We can deliver under one umbrella the highest quality to our clients by using available resources to provide timely, effective solutions. To reinforce these services, we offer a variety of training options on a customized basis. Ringgold has a proven track record of providing effective management supportive services and has helped secure millions of banking and bonding lines of credit to DBA firms, as well as supporting DBE firms in providing accounting and administrative support that help them sustain and grow their business. Our staff includes a talented group of licensed and certified public accountants, certified project managers, and business professionals. We provide DBE management supportive services in districts 1 through 3. Some of the assistance that we do help with are QuickBooks and other accounting system support, business plan preparation, cash flow analysis, bonding and financing assistance, credit restoration, and much more. You can contact us if you need any of those services. And then please remember to enter your questions in the chat. We will be answering them as we go. So I'd like to turn it over to Megan Moldenhauer. She'll be presenting for us today. Thank you, Megan.
Thank you, Olga. Good morning, everybody. As I said, my name is Megan Moldenhauer. I've been with IDOT for 15 years now, all through, all in the auditing area. So, yeah, let's get started. Next slide. Oh, do I have slide ability? I don't. Okay. So what is an indirect cost rate? These are your allowable indirect costs divided by a base, which is generally going to be direct labor. This rate is applied to direct labor as it's incurred on projects to allow for a firm to recover the appropriate share of indirect costs allowable per the terms of specific agreements. Your indirect costs are in accordance with FAR 48 CFR Part 31. There is an AASHTO audit guide. It's kind of a interpretation, if you will, of the FAR to assist in many aspects of calculating this overhead rate. Next slide. How does an overhead rate apply to IDOT? So you would bill the overhead rate to IDOT or even a local public agency based off of direct labor. So you bill your direct labor at actual payroll rates. You're applying that overhead rate to that payroll or direct labor. So for example, if you're billing an hour of work, you have an actual hourly rate of $60 an hour, you're billing the $60. If your overhead rate is 120%, your overhead rate of 120% times your $60 an hour is $72. So that's how you would bill this overhead rate on an IDOT project. Next slide. So for example, here's a copy of a IDOT invoice. You have your payroll rate right there. $60 for employee A, $20 for employee B times their hours. You come down and you have $900 of direct salaries for this invoice. Next slide. So that gets transferred over to the front page of the IDOT invoice where you see 120% is that rate, your payroll of $900, the overhead rate, or I'm sorry, the overhead of $1,080, which is your $900 times your overhead rate. That's how it would look when billing IDOT if you've never billed IDOT before. Next page. So schedule compilation. We're going to go over the schedule format and layout, over labor, executive compensation, direct costs, and indirect costs. Next slide. For reference, there is a sample schedule in the audit guide on page 40. For those of you that don't have it, I do believe we have a link to it somewhere in this presentation. If not, I will gladly send it to somebody. The allocation base, as I talked about, is generally direct labor for these DOT projects. There are ways to make it easier for you as, you know, you're setting things up, you know, exporting the trial balance to Excel and then getting rid of rows you don't need. That's a easy way to help ensure that you're not having errors when you're going from your financials to and putting it into the schedule. We do see a lot of times there are firms that just, you know, we're all human, we make errors. And so when transferring numbers from financial statements to the overhead schedule, sometimes we see errors just with inputting the numbers. So just a little helpful thing that, you know, if you don't want to retype everything out, this is a way that could help you speed things up. Next slide. So here's that sample schedule I talked about from the audit guide. Generally, what you're going to see is account categories. You don't have to list every single account out separately. You can group into categories. You'll have a general ledger balance for your first column, any adjustments for direct costs, disallowed costs, and then you'll have a final proposed, which would be your allowable indirect costs after any adjustments. So generally speaking, that's what we're looking for in a schedule. Next slide. All right, let's move on to labor. Let's see. So your labor is going to have direct labor and indirect labor. Indirect labor would include your leave time. It would be allowable, but there could be an unallowable component of it, which we'll discuss. Misclassifying labor has a significant impact on your overhead rate. So if you overstate your direct labor, you're going to understate your overhead rate, and then vice versa. If you're understating direct labor, you will in turn overstate your overhead rate. Next slide. So components of the direct labor, you'll have your regular time, which is generally speaking, you know, your hourly rate times your hours worked. There would also be an overtime component to it, the regular portion and the premium portion. Contract labor potentially could be included in your direct labor. If you are presenting these people as your employees, you are billing them as your employees. So on the IDOT invoice, if you're invoicing them as if they are your employees and you are applying overhead to them when you bill, then they should be included in your direct labor for consistency sake. Any direct labor in excess of contract limits is still considered direct labor. You cannot transfer that to indirect just because you didn't get paid for it. It's still direct labor. Next slide. Your components of indirect labor include, but not limited to, administrative time, paid time off, bid and proposals, training, any indirect overtime, not allocable to any one cost objective. So these are non-project costs that there's no specific project cost objective that they were incurred for. Next slide. Overtime, we've got different ways of accounting for it. Uncompensated overtime, which we will discuss. Compensated overtime would be your premium portion of, which would include your premium portion of direct overtime, assuming you're compensating them at anything above straight time. You account for it consistently, whether it's direct cost, whether as billable, non-billable, indirect costs, it all needs to be accounted for consistently. Next slide. So for a simple calculation, and this would mostly be, you know, for firms that don't have a job costing system that's fully integrated with their accounting system, you're generally going to be computing your own direct and indirect labor. So this is just a simple scenario as to calculating each of the components. So your direct labor dollars will be your direct hours times the actual rate. That actual rate, again, is what you actually pay the employee. Indirect labor is your indirect hours times their actual rate. The premium portion of overtime is your overtime hours times the premium amount. So if you're paying time and a half, that extra half time is called the premium portion of overtime. Make sure you are separating direct and indirect overtime out consistently. Let's see. Okay, next slide. All right. So if you have salary employees with compensated overtime, it's going to be basically the same as regular time how you calculate it. You have your direct hours times your standard hourly rate. You have your indirect hours times your standard hourly rate. And then, of course, you apply your premium portion consistently as we discussed on the previous slide. Next page. All right, a salaried employee with uncompensated overtime. This is where there's a couple different ways to handle it, but the traditional way, or the most common way, if you will, to handle it is a salary variance or standard rate method. So you have an employee that's working over their 20/80 hours, which is 40 hours a week for 52 weeks a year. You're gonna end up, when you're calculating it out, your calculation's gonna come above what you actually paid them. So you've got your direct labor would be your direct hours times their rate. Your indirect would be their indirect hours times their rate. And then, like I said, you'll end up with more money than you actually paid that employee, which would then be called the variance. So that variance would then reduce your indirect labor so that your total labor in the overhead does not exceed what you actually paid or incurred. So that's the standard variance, or salary variance standard rate method. We also have some helpful spreadsheets that we can share if anybody needs them for calculating labor. We're more than happy to help provide that, so you don't have to start from ground zero on some of these calculations. So feel free to reach out at any time and we can send you some templates to work off of. In this scenario, the standard hourly rate would be their salary divided by 20/80 hours. Again, that 20/80 is 40 hours a week for 52 weeks a year. If that employee is not a full-time employee, but they are salary, so maybe they're like a half-time employee, but they are salary for that half-time, you would want to adjust that 20/80 hours when calculating their hourly rate to whatever is appropriate. So, if they are a half-time person, you would want to divide it by 1040 instead of 20/80, which is half the year. Next slide. So this is a screenshot from the previous audit guide. I don't believe it's in the most recent version. And it's just another illustration of calculating that labor variance. I'm not gonna go over all of it, but it's just another illustration of it. So next slide. So as we'll go back to our schedule, you'll see you've got your direct labor there at the top. Highlighted in the fringe benefits section, you've got the PTO, your vacation, sick, holiday, and then down under general overhead, you have the indirect labor portion of it. So that's just a representation of how it would look on the schedule. Next slide. All right. Again, labor is calculated based off of actual hours supported by timesheets. It is not acceptable to estimate direct and indirect labor. We tend to see a lot new firms that come in and they estimate 90% is direct, 10% is indirect. That's not acceptable. It has to be supported by timesheets, and the hours have to be exact actual hours worked. Next slide. Oh, and on that, let me just say, if you are a firm that has to, you don't have the fully integrated job costing accounting system, and you have to calculate your labor each year, we do require that calculation. So you can submit it in ePass ahead of time or wait for us to contact you. But either way, we will be looking to see how that labor was calculated. All right, next slide. Executive compensation analysis. So an executive compensation analysis is required each year by all firms. The most used method is what's called the National Compensation Matrix. And below is a link to AASHTO's website where you can download the NCM, National Compensation Matrix. The workbook has a tool, the NCM tool tab. It's got embedded instructions. It's got position description tabs. So you'll want to double check what your executive may have, vice president title, but you'll want to double check those descriptions to make sure, does that person's activity actually line up to the vice president position description in the NCM? Maybe not. Maybe there's something more appropriate. You'll just want to make sure you're doing that double check to make sure. There's Q&As embedded as well as an example embedded in it as well. That's this is an outdated example, but it's fairly similar each year. Like I mentioned, you have all those different items that you can choose from that are helpful for you. Next slide. So this is a screenshot of the tool itself. You're putting in your gross revenues from engineering or work. Then it automatically calculates the reasonable compensation for each of those executives listed. It's not limited to the top 5. If you have more than 5 in your firm, you need to do this for everybody, not just the top 5. If you only have 3, that's fine. You don't need to put additional people to fill out 5. Just as many as you have, that's what you use. Next slide. So here's a screenshot of the actual schedule itself where you're putting in the information. Everything in yellow is what you would enter as the firm, as well as, of course, the position title and the name of the employee and if they're related party. So you're entering salary, bonus, deferred compensation, any other compensation. You've got adjustments for any unallowable activities or unallowable forms of compensation. And then step 4 is where you're putting in the numbers from that tool into each person's line. So, if the CEO is listed first, you'll put the CEO amount in that first line. And then it will eventually come up to a total adjustment required if there is one. And then you'll make that adjustment on your schedule. Next page. As we mentioned, your compensation includes but not limited to your salary, bonus, deferred comp, employer portion of retirement, maybe vehicle allowance, fair market value of stocks received. I'm sure there's other things, but that's the general stuff that we see. Next slide. Compensation from unallowable activities. Usually your entertainment, advertising, any lobbying, charitable activities would be considered unallowable. That would need to be tracked on the employee's timesheets, and then adjustments would need to be made for unallowable activities for that. Next slide. The unallowable forms of compensation, distributions of profit, expressly unallowable. Any compensation based on changes in prices of corporate securities, compensation incidental to business acquisitions would be unallowable. Next slide. So then here's our schedule again. And my apologies if you can't read this. It's a little difficult to fit that whole schedule on here. So you've got that first red circled line, which is your bonuses. And you'll see they made an adjustment of 28,500, 560, something along those lines. Next to that, you'll see it says A. Well, down at the bottom, A says executive compensation in excess of reasonable amount is disallowed. So that executive compensation analysis, if there was an adjustment that was required at the end of that, that's where they represented it. They removed it from bonuses. So then down under indirect labor, they've got another disallowance of 3,300, and it says C. C says labor costs associated with advertising, entertainment, and other unallowable activities. So we previously discussed that any of those activities are unallowable. They'd have to be tracked and removed from overhead. This is where this company, this fictitious company, made that adjustment right there under indirect labor. This is not saying this is exactly how it has to be represented. It's just an example to show you. So there's several ways to represent it. This is just one. So next slide. So let's see, we'll go to direct costs now. Direct costs are not allowable in the overhead as they are not indirect costs. Direct costs are specifically identified with a particular contract project cost objective. So again, that means they are not indirect costs. Cannot be allocated to multiple projects. Must be actual when billing. You cannot mark them up if you're billing them to IDOT, local agency, an actual cost contract. The audit guide chapter 4.6, 5.3 is very helpful in this, as well as FAR 31202 and 31203. Next slide. Types of direct costs. You could have in-house direct costs, which are generally generated by company assets, or an outside direct cost, a third-party vendor. These, for the sake of calculating your schedule, would be you could make it easy to identify and exclude from overhead if you you could include those as in their own separate general ledger accounts, so that those would just be easy, that every year when you put your schedule together, you would know, okay, this whole count is direct and do not include it in the overhead. All direct costs must be removed from overhead, whether they are billed or not. So as we talked about with direct labor, if you're above the limit of your contract, but you're still incurring costs, that's still direct labor. Well, it's the same with direct costs. If you're above your upper limit of your contract, but you're still incurring direct costs, those are still direct costs and cannot be moved into the indirect just because you could not bill them. Next slide. So examples of in-house direct costs, copies that are produced in-house, CAD, automobiles owned by the company, and we're not talking employees' vehicles that you're paying them mileage. That's an outside cost. These would be automobiles that are owned, leased by the company. Any survey equipment the company owns, leases. Same with boats, ATVs, other types of equipment. Again, you must remove the direct portion from overhead for these. All right, next slide. Your outside direct costs, lodging, meals, travel. Again, the employee mileage reimbursements. Any rental supplies from a third party. Any copies done by a third party as well. And then any sub-consultants would be an outside cost. It would be helpful again to set up those direct cost accounts in your general ledger if you haven't already. so that at the end of the year, it's already split out and you just don't include that on your schedule. Next slide. All right, so here is an example. Again, there are many ways to represent a lot of these adjustments for this purpose and this sample schedule from the audit guide. You'll see down at the bottom, there's a direct cost recovery, and it's a 107,000 adjustment. So that's generally what we would see as an adjustment for in-house direct costs. So vehicles, that CAD, that kind of stuff. We tend to see that direct cost recovery account. Again, that's not how it has to look. It just is for this purpose. You could make adjustments from individual accounts if that's how you wanted. That's fine, as long as the adjustment's being made. That's all we care about. So, and then down at the bottom, you'll see it says that that was an internal allocation for direct cost credit. The in-house direct costs can be very tricky. So please feel free to reach out to my office if you ever have any questions on it. We'll be more than happy to help. It's easier to help ahead of time than try to figure it out afterwards. So always feel free to give us a call and ask questions. Next slide. We'll go into the indirect costs. First off, there's allowability. As I mentioned, the regulation is FAR Part 31. The AASHTO Audit Guide Chapter 8 is a very helpful resource. Keep in mind that deductible for tax purposes does not mean allowable under FAR. For example, interest, special depreciation, charitable contributions are unallowable under FAR, even though they could be tax deductible. Next page, slide. Vehicle costs, and I'm only going to highlight certain costs that tend to have issues or be confusing or anything like that. There's a world of indirect costs, and it would take forever to go through every little thing. It's just important to know that indirect costs are your costs that are not directly related to a project, general administrative, that type of stuff. But again, we're just going to go over certain types of costs today. So vehicle costs, engineering consultants are required to maintain adequate documentation such as vehicle mileage logs completed in accordance with IRS requirements to establish that the vehicle costs in the indirect cost pool exclude personal use, direct project costs, and travel associated with any unallowable business related activities like lobbying, general advertising, and entertainment. That's on page 81 of the audit guide. If you do not have mileage logs, generally speaking, your auto expenses would be disallowed. Of course, there could be some other way of that you use of tracking vehicles that we can discuss, as long as it still meets the needs that that we have of making sure that the unallowable portions are excluded. Next slide. This is just a sample schedule, mileage log that with, just the basic information that would be needed, your date, your destination, your business purpose. That business purpose helps determine, is it project related? Is it an unallowable cost? Is it actually allowable? And then of course your odometer readings. For those that complete the BC 930, the IDOT form BC 930 for projects, that is not a actual mileage log in this sense of meeting the need, what we need. That is specifically project specific, and that does not count as the mileage log that we are talking about. Next slide. Vehicle costs. Luxury vehicles need to have special consideration. That one is a bit tricky, but it is something that we see a lot, and maybe even more so these days. But just bear that in mind. There needs to be special consideration for luxury vehicles. Personal use commuting is unallowable. You would need to track that and disallow the portion that's unallowed, that's personal. If you're not tracking, so say you're basically using the company vehicle as your vehicle, and on the weekends, you're running everywhere in it and you don't want to track every single time you get in it. If you were to say Friday, or whenever your personal would start, if you record your final odometer and then pick it back up that next work week, just knowing that any missing mileage would be considered personal, that would be fine to us. I don't need to know you took Timmy to baseball practice and came back. As long as you know that anything that's missing mileage wise, it would be considered personal or just unallowable and would have to be removed. So bear that in mind as you're keeping these. We know there's the complaint that it is a lot of work, and it likely is, but if you're using it a lot for personal, some little ways like that could help lessen the burden on you. That's FAR 31205-6 M2. And it's unallowable regardless of if it's on the employee's timesheet, or I'm sorry, W-2. Next page. So unallowable indirect costs, Chapter 8, again, of the audit guide, gives some pretty decent guidance on unallowable costs. There's a table at the end of it, table 8-1, that lists common unallowable costs, including the FAR references. So that tends to be very helpful, as well as Appendix C of the audit guide. And that's a more expansive list of allowable and unallowable costs. Next page. This is just a screenshot of that table 8-1 that I referenced that last slide, that just shows some common unallowable costs. And then next slide. Okay. So, excuse me. Here's our schedule again. We've got auto expense highlighted, and they made an adjustment of $13,580-ish, and their reference is E. So down under E, it says it was an adjustment for personal use of company asset. Automobile was disallowed. So that's where you'd see that adjustment for any personal use of the company vehicle. And then that whole section down there, that's circled, if you will, all those little reference numbers that have their FAR reference and then what the adjustment was for. Those are all just different adjustments for different unallowable activities. There's some contributions, lobbying in there, interest in there, entertainment. So that's what we would like to see on the schedule, is all your adjustments have a note that tells what the adjustment was. It just makes things much easier when reviewing and understanding what's in there, what's not. So just an example. Next slide. Income offsets / reimbursements, refunds of any indirect expenses. If you have expenses on the overhead schedule that get reimbursed, refunded, a common one is insurance, or returning supplies or something like that. That has to still offset the indirect expenses. So if you had an accident in the vehicle, you paid for all the vehicle repairs, those repairs are in your overhead, but then you get a check from insurance to for that repair, you need to offset the overhead. It's not fair to have you're charging for, you're including the cost for the repairs, but you're not then offsetting again with the income from it. So just bear that in mind. If you've got anything that comes in that you're getting reimbursed for, or anything like that, make sure to think about it. Does that reimburse something that was included in the overhead? If so, it likely needs to offset that indirect expense. Next page. Supporting documentation. This includes timesheets, usage logs, bank records, tax documents, invoices, receipts, business purposes, any staff information, account codes, and that type of stuff. Everything you are including in that overhead needs to have, you need to make sure you have the support for it. Next slide. Because the burden of proof is on the consultant. Costs must be supported, and engineering consultants must maintain adequate records, including supporting documentation, to demonstrate that the costs comply with applicable FAR cost principles. The contracting officer may disallow all or part of a claim that lacks adequate support. So if we question something and you have no support for it, we technically can disallow anything that does not have support. So bear that in mind. The more support you have, the better it is for you. Next slide. Is Olga, is this where Michelle takes over?
Yep.
Okay,
Hello.
thanks.
Good morning.
Good.
Thank you, Megan. Michelle Ringgold here. So we're going to go over the importance and just outlining how you're setting up your accounting system, because those individuals that configure their accounting systems in compliance with the FAR regulations and objectives have a lot of a much more easier time when it's time to calculate and supply the support, because you're setting up your system to capture not only eligible costs, but costs that are not eligible. So if you can just go to the next slide. So working on government contracts, maintaining an operable accounting system under your general ledger control is critical. The system should be able to properly segregate costs, meaning direct costs, indirect costs, allowable, unallowable, identify direct costs by cost objectives and your contract. The AASHTO guide, audit guide, chapter 6.4 does a pretty good job of kind of outlining these requirements. Those that are using various accounting softwares, whether that's QuickBooks or Oracle, you can actually reach out to our office and we can actually help you configure your software. So when you're running a trial balance, you actually can have your system coded where you have it segregated versus direct versus indirect, allowable versus unallowable. So it's a lot easier for you. You can also do it on a per project basis as well. Next slide. So just understanding the fundamentals, of accounting, your basis of accounting, whether that's cash or accrual, you have to be consistent. I heard Megan state that sometimes we'll get a client where it may be beneficial for them to get a higher overhead rate if they do it on a cash basis versus an accrual basis, and you cannot flip and flop. If you're on an accrual basis when you're calculating your overhead, for the 3 years, and then all of a sudden you feel that, changing that method would increase it, your overhead rate, that's not allowed. Understanding cost accounting, meaning like on a per project basis, not only can you set up your general ledger system to help you calculate your overhead and make it more streamlined for you and automated as you're putting transactions in. You can also do this on a per project basis so that you can make sure you're not double dipping. And also when folks are doing audits, our firm sometimes do audits for the overhead rate. Understanding that these controls are in place lowers the risk of your audit. Labor reporting system, making sure you have a good system where you're able to report labor. Labor is the biggest issue. Not only do you need the timesheets, but we need to make sure that the system is adequate enough to charge direct costs versus indirect costs. If you have PTO or overtime that's may not necessarily be allowed under that particular agreement, making sure the software is set up properly and capturing it properly. Next slide. So basis of accounting. So it is important to understand, are you going to do your overhead rate on accrual basis versus cash basis? Cash basis is where you're recording expenses as they are reported on the income statement when cash is paid out, and revenues are reported on the income statement in the period the cash is received. So in other words, a transaction is not happening and being recorded into the accounting software until cash is actually being exchanged. So in real simple terms, if I'm paying expenses, I'm not recording it until I actually pay it or write a check. And then if I'm recording revenues under the cash basis method, I'm not actually recording the income until the cash is received or the payment is received from my customer. That is not generally accepted accounting principles under financial reporting, but we're talking about overhead calculations and the method that you can use. Accrual basis. Next, go back. Thank you. Accrual base is expenses are reported on the income statement in the period they occur or when they expire, which is often in a period different from when the payment is made. Example, I'm a contractor and I have a subcontractor, a sub-consultant. We've done some work in the month of January. And my subcontractor sends me an invoice in the month of February for the work that was done in January, or even if they send it at the end of January. But I'm not paying that subcontractor maybe until I get paid, or maybe my terms are 30 days. So under the cash basis, when I pay it, let's just say I paid it at the end of February, you would see that expense hit on a cash basis in February. On an accrual basis, that expense would be hitting the financial statements at the time that it was incurred, and it would be reflected in the January period. The opposite side of that is the revenues, sales or receipts from my customer. Revenues are reported on the income statement when they are earned, which often occurs before the cash is received from the customer. So if you're in a business where you're billing your customer, you're an architect and you've performed work for the month of January, you've billed your customer, you may not receive that money until the end of February. Under the cash basis, you would have posted that revenue in February, but on the accrual, you would post that revenue in January. The expense side is what we call, when we look at accounts payable, that's how you get an accounts payable. You hit the expense, and then the offsetting side is the accounts payable. And then on the sales side, you would charge or credit the sales side or revenue, and then you would debit accounts receivable. On cash basis, you typically will not have an AR, which is accounts receivable, or an AP, which is accounts payable. Next slide. Segregating costs. That's very important, right? How are you gonna be able to understand your costs, what's billable, what's not for a project if you're not segregating the costs? Billable costs within the contract period, making sure that the cost is in accordance with, the contract upper limits. If it's non-billable, being able to track that outside of the project to make sure that it's not included in the project. Project costs not directly billable due to contract compensation terms. Maybe you can't bill over a certain amount. Making sure that your system is set up to track those things will make your life a lot easier. Understanding indirect costs, what's allowable versus unallowable. Megan did a very good job of explaining what that cost is. We know that indirect costs are those costs that's not necessarily directly related to your project. They typically are considered kind of like fixed costs, if you will. So, some indirect costs is your general administration, whether that's rent or things like that, but just understand that it's cost that is not necessarily related to your project. And in the AASHTO guide, I think it's chapter 8, I think I saw Megan do a little screenshot giving you items that, are unallowable costs. I mean, certain things, just because it's allowable or deductible on your tax return does not necessarily mean that it's allowable here. For example, special depreciation, bonus depreciation. If you're paying late fees to the government, those things have to be subtracted out. So having a handle on what the rules are and setting up your system so that they're segregated out is very important. Next slide. You want to be consistent. We talked about, being consistent, not only in the government of what, I'm doing one thing for, let's just say IDOT or the federal government or whoever that is, but then I'm doing something different on the private side of how I'm tracking my costs. We should be consistent and not inconsistent, meaning having a policy in place that is going to benefit you for your overhead rate on the government side, but yet you're doing something different. If you have an allocation rate, how you allocate it should be consistent across your projects, as well as regardless if it's an IDOT or government client versus a private client. Understanding, different types of contracts and how you're handling costs. Lump sum versus loaded rate contracts are handled differently, and they have to be calculated differently depending on, if this is a time and material type project versus a lump sum type project. Direct costs must still be tracked. Direct costs above contract limits can't be recovered in the overhead rate, or you can't move it, to another contract. And I've heard situations where a client will call me and say, well, even though I was over on this project, I'm going to move the cost to another project. But if that cost is really not related to that particular project, you really should not be doing that, and it's not allowed, and it's against the rules and regulations. Next slide. Make your accounting system work for you. Understand what the rules are. If you have someone on staff, or you can call Ringgold, especially if you're under IDOT, we do help with that, help setting up your system. You want to develop a system that will make compiling your indirect cost schedule a lot more easier and effective for you. We talked about the systems having the ability, QuickBooks or other softwares that you're using. It has the ability to create allowable and unallowable accounts. You can do it through your GL functions. We can do it through your class functions. We can set up different item codes. There's a couple different ways that we can do this, and we can assist you with that. Also making sure that your system is set up where you can segregate the direct and indirect, but not only direct costs that's allowable, but you want to be able to also segregate direct costs as unallowable, and the same thing for indirect, to make sure your calculations are supported and tracked properly. Creating separate labor accounts and timekeeping systems, including direct and indirect, is very helpful. If you're using an automated time system, whether that's QuickBooks or you're just using an Excel spreadsheet, having those labor codes identified on a per project basis, so individuals that are reporting the time can segregate them at that point in time. Then when it goes into your software, whether that's someone keying it in manually, they can look at that timesheet and now you have it separated out. Or if it's an import directly into the system, you can configure the software so that when the labor is reported, it's reported into the proper categories. Creating sub-accounts in your general ledger. So not sure, I want to just take a step back and just explain your general ledger accounts. It's something that we call a chart of accounts. And what we do is we have a numbering system that tracks labor. Your labor GL may be 5,000, but within that labor GL, you may want to have sub accounts. Whether that's, if you're an architect, you may have design, or in my business, you may have different levels like a staff or a senior level, but having the ability to segregate the G&L is very important. That cost that may not be, able to be billed, like if it's PTO, having that segregated is very helpful as well. Next slide. Labor charging system. We talked about segregating properly, understanding, your direct labor hours attributed to a particular contract, having that separated out. Indirect labor, those are examples are hours not attributed to one particular contract. You must track labor related to unallowable activities separately so it can be removed from the overhead rate. Next slide. Time cards. It's very important to have time cards that support, the labor that's being paid. Detailed time cards require all employees and owners. A lot of times, especially if you got owners charging time to a project, you got to have a timesheet for all hours worked, whether paid or not. That's very important. Types of timekeeping systems. I mean, whether it's a manual Excel spreadsheet, or if you have actual time tracking software within your software, you have to have some system and efforts to make sure that you're tracking the time properly. And a lot of times we have pushback on the overhead because we have the labor amounts, we have the payroll, but we don't have the timekeeping. And as Megan said, that is one of the required support documentation, and they're in their rights to reject some of the time if it's not supported properly by time cards or time sheets, and they're filled out improperly. Having a timekeeping policy is also helpful. IDOT Form BC 930 is not a sufficient timesheet as it does not capture all the hours worked for the employees. Reference the AASHTO Guide, Chapter 6.4b for labor charging system and having internal controls in place does a really nice job and provides a really nice guideline to help you. Next slide. Record keeping requirements, understanding what you're required to maintain for adequate records. That's under FAR 31-201-2D as indicated here. And we're going to give you a copy of the presentation so you can use a lot of the things that we're referencing. But you must maintain adequate records to demonstrate the claims cost has been incurred and are allowable to contracts. The more detailed, the better to provide allowability. The bottom line is you want to always be audit ready and create an audit trail and always have that supporting document. So getting familiar with that and understanding what the supporting documents are required, but also how long do I have to maintain them is very important. Next slide. So this is a checklist right out of the AASHTO Guide, table 6.1, just giving you, it's almost like a self-assessment, looking at your existing labor system and just going through asking these questions, is there a segregation of responsibility? I'm not going to read all of these, but are employees routinely made aware of the controls? How are you recording the time? Who's recording the time? Is it being done on a daily basis? Is it linked to a time card, an actual time card, your system? Recording all hours, whether worked or paid or not, is very important. So this is just a little nice screenshot of some of the important characteristics of having an effective labor charging system. And this is just kind of a little checklist that you can use to kind of, rate yourself to see how you're doing and see where there may be gaps where you need to actually maybe make some improvements. Next slide. Use of a CPA. So it's not required, just so you know, for an overhead rate calculation to, have a CPA, and an audit is definitely not required. We do have different levels of audit, a compilation being the lowest level, where we're really just relying on the information that you're supplying and just making sure that it's in accordance with the rules. And this is more on the financial side, because a lot of times, if you're using a financial statement or a trial balance to create your overhead. Some folks use the tax returns, but this is if you're using financial statements, there is a higher, how should I say it? If your compilation is the lowest level, then that's going to be less reliant than maybe a review or your audit. Your compilation is the lowest level that a CPA can issue a financial statement, and you do not have to be a CPA, a licensed CPA, to issue a compilation. It can be an internal accountant done internally. The last two, which are reviews and audits, you do have to be a licensed CPA. And if I'm on the other end trying to validate the accuracy of what was used to calculate the overhead rate, I'm going to feel more comfortable, because it's a higher level of insurance, if it's an audit versus a compilation. But none of these are required. You can use your trial balance to do a calculation, as well as your tax return. Next slide. Factors to consider when hiring a CPA. Want to make sure that the CPA has the requirements and, the continuing education, asking for the peer review. We have to, every 3 years, any licensed CPA firm has to get a peer review, and you want to make sure that the CPA is competent and stand up on the time, up on the continuing changing standards and rules, making sure that they're well versed in GAGAS, which is your government auditing standards, making sure that the CPA has experience with the cost principle, which is FAR Part 31, understanding cost accounting and various. I'm not going to read all of these, but it is important when you're, especially as you grow and you get larger, that you engage a CPA that has a handle and adequate experience to make sure that you're, in compliance. Next slide. Factors to consider, when hiring a CPA. Are they well versed in job costing? Just because you're a CPA, you're a certified public accountant, trust me, we do not know everything. We specialize in different industries and different segments. There's many CPAs out there that do not do job costing, do not deal with this. So you want to make sure that you're working with a CPA that understands these particular requirements. And just because they're a certified public accountant does not mean they have the experience. Next slide. IDOT pre-qualification submittal. Is this you, Megan?
Yeah, I'll take back over.
Okay, all right, thank you.
So as you guys submit your annual submittals, if you've done this before, the internal control questionnaire is a requirement. We use this for several reasons. But one thing to remember is that from year to year, some of those answers change. Make sure you are updating it annually so that it reflects the year under review, because we use some of that data that changes in our risk assessment to determine the necessary procedures for the review. So please make sure you are updating it. If you don't understand a question, please ask us. We get some weird answers to questions that tell us somebody probably didn't understand the question. And so going back and asking the firm more questions about it, it just takes more time trying to figure out what was meant by it, rather than if you call us and say, I don't understand this, and we can talk about it and figure out exactly what your company does and how you need to respond. It's much easier that way. So please feel free to ask us at any point if you have a question. If you've done it for a couple of years and you're like, I've never really understood this question, I should probably ask, that's fine. I'm not judging by any means, as long as we get it accurate. That's what we're aiming for. So please feel free to ask questions and make sure you're updating it annually. If you have not already signed up for the email subscription service, that's an extremely helpful thing to sign up for. Those of you that know Jenny Lasser from the design side, she manages that subscription service. She sends out any updates you need. If there's anything on the financial side that we need to get out to you guys, we go to Jenny and Jenny sends out an email from that subscription service. So if you haven't already, I highly recommend signing up for it. Pretty simple to do. And I think all the instructions are there, including, oh, that website might need updated, but at least the email address is accurate. Yeah. Does anybody have any questions?
The only question we had, I think, was getting a copy of slides. And just to remind everyone, we will be, IDOT will be sending a copy of the slides, and the presentation will be online, so you can rewatch it if needed. Again, thank you, Megan, for helping us out today, and thank you, Michelle, for all your information. Megan's contact information is there. Our information is there. As Michelle stated, we can help with your overhead rate preparation. So feel free to contact us. And it looks like we don't have any questions, Megan. Thank you so much. We really appreciate you always coming through and helping us out with this presentation.
Great. Thank you, guys. And if anybody has anything, if you're thinking about it later on down the road, again, feel free to contact me at any time. We're here to help. So
thank you. Okay, so we're going to go over the disadvantage, the DBE supportive services. Here are our supportive services consultants. We have Theo Joyner with Ralph G. Moore and Associates. He is the certification consultant for districts 1 through 3. Ted Lackus from Gonzalez Companies. He is the technical consultant from district 1 through 3. We have Michelle Ringgold. She is the management consultant from Ringgold Financial for districts 1 through 3. We have Melissa Hamilton, Synergetic Solutions, Certification and Management for Districts 4 through 6. We have Maria Prado from Prado and Renteria. She is a certification consultant from Districts 7 through 9. We have Mr. Ron Brown from RS Brown Consulting. He is the technical consultant for Districts 7 through 9. And we have Mark Vaughn from FV Consulting. He is a management consultant from District 7 through 9, just so you can put a face to the name. And our contact information is here on this page, like we stated. A copy of the slides will be given to you in case you need to contact any of our supportive services consultants in any district. Technical and management assistant. So ongoing assistant helps DBEs maintain a competitive edge. This assistance is complementary to IDOT's DBE firms or to firms certified in the Illinois UCP that are bidding on IDOT contracts. Some of these services include estimating and bidding, equipment and resources, project site inspection, pre-qualification, and that's part of the technical services. And the management services include bookkeeping systems and credit restoration, bonding and insurance, business and strategic plans, marketing, and that also, and overhead rate preparation also falls under the management, just so you know. Resource centers. Each of IDOT's 9 districts offer essential equipment and resources to conduct business with the agency. So some of these resources centers, you can access computers, the internet, scanner, copier, printer. You can also get staff assistance, including support for DBE applicants. The resource centers are free of charge to all firms seeking to do business with IDOT. You can scan the QR code or visit the link for a list of locations in your district. Contract compliance officers are accountable for EEO and labor compliance on state and federally funded projects. They ensure contractor compliance with state, federal laws and regulations governing the EEO and labor compliance and DBE programs. You can visit idot.illinois.gov and search for contract compliance officer to find a local officer in your district. Available programs. So there is a DBE reimbursement program. IDOT offers 50% reimbursement to qualifying firms in the select categories while funds are available. Some of these costs include association or organization membership costs, training or certification classes, website capability statement or logo. You can contact the Borough of Small Business Enterprises to discuss criteria for these limited time funds. Mobilization payments to account for the preparatory work and operations necessary for the movement of subcontractor personnel, equipment, supplies, and incidentals to the project site, and for all other work or operations that must be performed or costs incurred when beginning work, the contractor shall make a mobilization payment to each subcontractor. The mobilization payment must be made at least 7 days prior to subcontractor starting work. The mobilization payment to the subcontractor is an advance payment of the reported amount of the subcontract and is not a payment in addition to the amount of the subcontract. Therefore, the amount of the advance payment will be deducted from future progress payments. The amount paid is a percentage of the value of the subcontract shown in the table below. The HCCTP program, the Highway Construction Careers Training Program, boosts participation of diverse individuals in the industry and on IDOT's highway construction projects. Illinois Community College partners offer training in industry, trade, and life skills such as OSHA 10 certification, welding, forklift operation, first aid, CPR, AED, math for the trades, introduction to electrical, plumbing, sheet metal, carpentry, introduction to tools, and more. Employment is not guaranteed, but however, participants do receive job placement assistance. And 4 reasons why HCCTP graduates make ideal hires. They are well trained to fulfill entry-level roles, professional talent with diverse perspectives, eligible for work on IDOT project sites, reimbursement via IDOT training special provisions, TPG. And who can join the HCCTP program? Eligibility is open to women, minority groups, and other persons from historically underutilized populations. You must be 18 years old, have a high school diploma or GED, valid driver's license, and ability to pass a drug screening. Events and resources. The Borough of Small Business Enterprises brings innovative events to the public with 3 goals in mind: to share skills to become more competitive on IDOT projects, help individuals and businesses work with IDOT and form strategic partnerships, encourage sharing of best practices, policy, and procedure changes. Each district hosts events year-round to help firms do their best work with IDOT. You can visit the link below for any workshops. Today's challenge, tomorrow's reward, TCTR, is IDOT's annual conference that provides opportunities for networking, skill building, and knowledge sharing among our vendor network. All firms doing business with the department, including primes and subcontractors, consultants, suppliers, and our various partners are welcome. Our next TCTR is April 1st and 2nd, 2026 in Springfield. So last year's award and nominees are below. You'll be able to see the nominees for 2025, and there'll be new ones for 2026. Again, the award nominees and where the star is the awardees. The IDOT TCTR YouTube playlist. So all our TCTR sessions are on the YouTube channel, on the YouTube playlist for the IDOT TCTR. You can visit and revisit these sessions that were done last year in 2025 TCTR sessions. Staying connected. So IDOT intramural workshops, you can visit IDOT's website for information on upcoming workshops and events through the year. The link is below, and also the QR code. So we are having an in-person today at the District 1 Resource Center at 3 p.m. in regards to the interim final rule. So everyone is welcome. And then we will have the online Wednesday, January 21st, and online Monday, January 26th. You can click on the QR code and then sign up for these. And then the in-person one, just so you know, consultants will be available if you need help with your personal net worth and personal narrative, in case if you still need help with the narrative. The Building Blocks of Success workshop series will continue through February 2026. You can register via Eventbrite. On the right is a flyer of the Building Blocks of Success workshops. And then for January, our next one is on Thursday at 10 a.m. Strategic Financial Projects from Policy to Pavement. And to the right, we also have the rest of the workshops for January, and also the past workshops. You can also look for these on our YouTube playlist in case you missed any of these workshops. February workshops, again, on the right, you'll see the upcoming February workshops. March and April workshops, you can register on Eventbrite for updates regarding our TCTR conference workshops. And just a reminder, it is April 1st and 2nd, so you can save the date to join us for TCTR. So the IDOT Supportive Services Eventbrite, the QR code is on the screen and the link to visit, and you can start following us to get information on upcoming events and workshops. Again, the Building Blocks for Success, the past workshops are on our YouTube channel, which are on the playlist. It's the consultant playlist, and you just hit playlist and it'll come up. IDOT Supportive Service Consultant YouTube playlist, and all our past workshops will be on there in case you missed one or you want to revisit today's. You can always access it through the YouTube. Again, the QR code is on the screen. And so you can scan the QR code or click the link in the chat to provide feedback about this session. And as a reminder, the event is recorded. You'll receive a copy of the event recording, a presentation, links to resources and programs, upcoming workshops and events, contact information for OBWD staff, consultants, and contract compliance officers. So we'd like to thank you for attending today. We'd also like to thank our presenters, Megan and Michelle. Thank you for joining us today.
Thank you. And everyone, before they leave, I just wanted to just remind everyone that, and correct me if I'm wrong, Brian, but I think the deadline for the personal narrative statements in the network, the net personal net worth statement, is January 31st. So that's, that's less than 11 days. And if you look at business days, it's even less. So I just want to encourage everyone, the deadline is approaching. So if you haven't gotten that information in, you really need to get started on it. Thank you.
I actually think it's the 30th.
Is it the 30th?
I
Okay.
think it is, whatever that Friday is. And I also wanted to point out, we have a question in the chat.
Yes, I just saw that. So do you have, Megan, do you have a template on estimating construction projects? Also, will you have a webinar on prevailing wages? Oh, so this is a question for everyone.
Did we lose Megan?
Or Michelle, do we have a template on estimating construction projects?
I don't know if IDOT has something. Our office do have certain templates, and estimating construction projects, though, you also can reach out to the technical group, because they are the ones that are really helping with the bids and helping you, estimate those. So isn't there information, Olga, in the presentation for the different districts?
Yes, so District 1 through 3 is Ted Lackus, and then I know Ron Brown. So if
yeah.
their information is on the slide. So let me know if you want me to if you can shoot me an email, Irene, and I can get their information over to you ASAP.
And then I think the next question was on prevailing wages. Definitely we're always, I don't know if we have any seminars on prevailing wages. I think we've had some in the past, Brian, but I also know that this is an opportunity to, give us information on future workshops that you would like to see. So Brian, I don't know if we have any coming up, but I definitely think prevailing wages is good. And I know we've done it in the past.
Yeah, as far as these building blocks workshops, I want to say yes, but I'm not sure. I know for certain that we've had it at TCTR, And we plan to have that again in April in person.
Thank you.
Thank you, everyone. So again, thank you everyone for joining. Irene, if you want to shoot me an email, I'll go ahead and get you Ted or Ron's information right away. And thank you, everyone, and have a good rest of your day.
Thanks, everyone. And thanks, Michelle and Olga. Appreciate it.
Thank you. Take care. Bye.